reaping what they have sowed. Is this the new frontier of the American politics?
A deep dive into what matters to you the most. Angles you won't find anywhere else. News that impacts your life.
This is India's #1 news network, and you're watching News9, English news as it should be.
Good morning, you're watching News9. I'm Karthik Malhotra. Well, Donald Trump says it's a done deal, but the word is mum from Washington and Beijing officially on the deal between US and China. That's the big story that we're tracking for you this morning. We'll also get you a mood check on the Indian stock markets as we near the weekly expiry. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, let's bring you all the headlines that we're tracking for you today. Donald Trump hails excellent U.S.-China ties as both sides reach framework deal after London talks. Trump says while China to supply rare earths, U.S. to retain Chinese students in universities. External Affairs Minister S Jaishankar holds wide-ranging talks with EU leaders in Brussels, pushes for early India-EU free trade agreement and deeper cooperation in security, technology and global development initiatives. An Indian automaker's delegation prepares China visit to secure rare earth magnets amid EV supply crunch. 40 to 50 executives await Chinese ministry nod for crucial talks as sector faces mounting pressure. Maruti Suzuki's Dzire becomes the first Indian sedan to earn a 5-star Bharat NCAP safety rating. Gadkari applauds Made in India milestone and companies push for 6 airbags across all variants. SEBI mandates new UPI payment system for all registered intermediaries from October 1st to curb fraud and enhance investor protection with launch of SEBI check verification tool. The National Stock Exchange gets SEBI's approval to launch monthly electricity future contracts. Aims to deepen power market liquidity and enable better price discovery through hedging tools and future derivative offerings. And there's a red alert in Delhi as temperatures soar past 45 degrees Celsius. IMD warns of severe heat wave. Google launches fresh round of voluntary buyouts across key divisions, urges remote employees to return to office amid ongoing cost-cutting drive. OpenAI launches O3 Pro model with enhanced reasoning capabilities, replacing O1 Pro for ChatGPT Pro users and offering advanced tools, better accuracy and reduced pricing. Let's start with the first story that we're bringing to you this morning. US President Donald Trump hailed excellent ties with China on Wednesday, saying the two economic superpowers reached a deal after 2 days of talks aimed at preserving a truce in their damaging trade war. Now, Trump said on his Truth Social platform that China would supply rare earth minerals and magnets, while Washington would allow Chinese students to remain in American universities. Now, his post came after top US and Chinese negotiators announced a framework agreement late Tuesday following 2 days of marathon talks in London.
We made a great deal with China. We're very happy with it. We have everything we need, and we're going to do very well with it, and hopefully they are too.
And coming to trade deals that India is trying to stitch, External Affairs Minister S Jaishankar is on a key diplomatic visit to Brussels, deepening ties between India and the European Union and pushing forward strategic discussions. Now, Jaishankar on Wednesday met top EU leaders, including European Parliament President Roberta Metsola, Trade Commissioner and Commissioner for International Partnerships. A central focus to the discussions was the India-EU Free Trade Agreement, which both sides described as progressing well. Jaishankar expressed confidence that the long-awaited deal could be concluded by the end of this year, an agreement he says would take the India-EU relationship to a new level. Jaishankar also discussed trilateral cooperation on clean energy, green shipping and digital inclusion, signing an agreement aimed at advanced joint pilot projects in developing nations under the EU's Global Gateway initiative. Now, during his meetings with EU lawmakers, Jaishankar emphasized India's firm stance against terrorism and thanked European leaders for their strong condemnation of the recent Pahalgam terror attack. Moving to the auto sector now, as there's been mounting pressure on the Indian auto sector, a delegation of around 40 to 50 auto executives, including top representatives from major OEMs and component suppliers, is preparing to visit China in a bid to secure the much-needed rare earth magnets, which are critical components for electric vehicle production. While visas have been issued, the group still awaits a green light from China's Ministry of Commerce to hold formal meetings. The visit comes in the wake of China tightening rare earth exports since April 4th, requiring special licenses for 7 key rare earth elements and magnets. With China controlling over 90% of global magnet processing, the supply crunch is putting pressure on Indian manufacturers, especially in the EV space. Now, India's largest automaker, Maruti Suzuki, is already feeling the pinch. Production plans for its much-anticipated electric SUV, the e-Vitara, are being scaled down from 26,000 units to just 8,000 by the month of September. Its Japanese parent, Suzuki, has halted production of the Swift hatchback too globally. Now, as of May, around 30 import requests have been cleared by Indian authorities, but are still pending approval from China, with not a single shipment delivered so far. The industry has urged the Indian government to step in and fast-track clearances before inventory runs out and production lines start to slow. So how devastating really is the impact of the magnet shortage, and how prepared is India, or how prepared is India likely to be in the future? My colleague Shweta Kothari unpacks this for you.
India's race to secure critical minerals is picking urgency, but there is a crying need for speed, with China now imposing fresh export curbs on rare earth elements, especially magnets. India's industrial ambitions are under threat. Now, these curbs, described by Commerce and Industry Minister Piyush Goyal as a wake-up call for the whole world, must sharpen New Delhi's focus on long-standing overdue mining reforms. Now, rare earth elements like neodymium and dysprosium are indispensable in making high-performance magnets, which are used in electric vehicles, wind turbine, defense electronics, and even consumer-wide goods like refrigerators. A single EV requires nearly 2 kilograms of these magnets, while India's white goods sector relies on them for compressors, fans, and sensors. Now, Goyal, speaking in Switzerland, highlighted how India is actively building alternative supply chains and treating this disruption as both a crisis and an opportunity. He confirmed that the Indian embassy in Beijing is in touch with Chinese authorities to resume stalled shipments. Simultaneously, the government is also boosting domestic production through Indian Rare Earths Limited and also exploring other global magnet sources. This supply chain crisis situation is similar to the 2021 semiconductor shortage, when China's post-zero COVID exports controls triggered price spikes in automobiles as well as electronics worldwide. Now, will EVs, electronics and home appliances see inflationary pressure once again? If rare earth access remains choked, that's something that policymakers should guard against, especially as inflation has finally come under control and the central bank RBI has doled out a handsome rate cut. Back to magnets. India has 6% of world's rare earth reserves but contributes less than 2% to global supply. The mining sector remains engulfed in regulatory bottlenecks, slow exploration and limited private sector participation. Reforms ranging from policy overhauls to magnet manufacturing incentives, perhaps in the form of a PLI, may be underway. But Minister Goyal has cautioned results will take time. As China weaponizes its mineral dominance, India's path forward lies in speed, scale and self-reliance. The clock is ticking, not just for policy, but for industrial self-reliance.
All right, so that's the story on India's crying need for rare earth magnets. But in better news coming from the auto sector, Maruti Suzuki has crossed a major milestone in India's automotive safety journey as the all-new Dzire has become the first sedan in India to be awarded a 5-star safety rating under the Bharat New Car Assessment Program or Bharat NCAP. Union Minister Gadkari handed over the certificate at a ceremony in New Delhi yesterday, calling it a proud moment for India's auto industry. The Dzire, based on Suzuki's 5th-gen hot-tech platform, comes packed with key safety features like 6 airbags, electronic stability program plus, hill hold assist and a 360-degree high-definition camera. Now, another Maruti Suzuki model, the new age Baleno, also performed well, earning a solid 4-star safety rating under the new testing protocol. Now, praising Maruti Suzuki's initiative, Gadkari said that Bharat NCAP will drive consumer awareness and encourage manufacturers to align with global safety standards. He applauded the company's move to make 6 airbags standard across all variants by the year end, calling it a significant stride. Maruti Suzuki's MD and CEO Hisashi Takeuchi welcomed the recognition and reiterated the company's commitment to raising safety benchmarks across its product range. Now, a bit to tighten its grip on investor safety, SEBI Chief Tuhin Kanta Pandey said all registered intermediaries collecting funds from investors will now be required to use a new UPI payment mechanism starting October 1st this year. The overhaul comes amid rising concerns over fraudulent activities by unregistered entities impersonating legitimate firms and duping investors. To curb this growing threat and build investor confidence, SEBI is introducing a standardized UPI address structure for all SEBI-registered intermediaries. SEBI is also rolling out a new verification tool called SEBI Check. This digital functionality will allow investors to cross-check the authenticity of UPI IDs before making any transaction. Now, through a simple QR scan or by manually entering a UPI ID, investors can verify critical details like the intermediary's bank account number and IFSC code. And in a move set to transform India's power trading sector, the National Stock Exchange has received approval from the market regulator SEBI to launch monthly electricity futures contracts. The initiative is aimed at equipping market participants with tools to hedge against electricity price volatility and enhance transparency in the sector. The NSE said that launch marks the beginning of its long-term vision for a full-fledged electricity derivatives platform with plans to roll out contracts for difference and long-duration products like quarterly and annual futures subject to further regulatory nods. Remember, NSE was the first Indian stock exchange to set up an electricity exchange, having launched Power Exchange India Limited in 2008. The move follows similar approval granted to MCX last week for electricity derivatives. Delhi is currently grappling with extreme weather conditions as temperatures soar beyond the threshold of 45 degrees Celsius. The Indian Meteorological Department, IMD, has issued a red alert for the national capital, warning of severe heat wave conditions. Heatwave have risen over the northwest India from stations like Chandigarh and Patiala and by about 1 degree Celsius to about 48 degrees or so, becoming highest maximum of the season over the country. Severe heatwave conditions reported at isolated places over West Rajasthan, Punjab and Jammu and Kashmir have been reported. Meanwhile, Delhi recorded the highest peak power demand of the season on Wednesday. This year, the peak power demand of Delhi is expected to cross 9,000 megawatts. Previously, an all-time high peak demand in the national capital was recorded at 8,656 in 2024. Moving to a global story coming in this morning, Google is undertaking another round of cost-cutting measures, this time by offering voluntary buyouts to employees across several key divisions, including search, advertising, research and engineering. While the exact number of affected staff remains unclear, the move is seen as a part of the company's ongoing strategy to optimize resources and focus on future priorities. Now, the wave of buyouts comes amid broader workforce realignments that began back in 2023 when Google slashed around 12,000 jobs in response to slowing demand following the post-COVID digital boom. Now, in addition to the buyouts, Google is also reportedly asking remote employees who live near office campuses to transition to hybrid work schedules. The move aims to promote more in-person collaboration and synergy across teams. And staying with the US technology space, now in a major leap forward for artificial intelligence, OpenAI has launched O3 Pro, its most advanced reasoning model to date. Now, the upgrade is available to ChatGPT Pro and Team subscribers, replacing the earlier O1 Pro version with broader access for enterprise and educational users expected within the week. A part of the new O3 model family, O3 Pro is designed to tackle complex tasks in science, education, math, programming, and writing with greater reliability and nuance. According to OpenAI, human testers consistently preferred O3 Pro, citing improvements in clarity, instruction following, and comprehensiveness. The rollout also coincides with an 80% price cut for input and output token costs, making O3 Pro more affordable via both ChatGPT and API access. API users will be charged $20 per million input tokens and $80 per million token output tokens. Time for a short break right now, but on the other side of the break, we'll have Amit Kumar Gupta, founder of Fintrek, explain to us the market mood as markets have only just opened. You're watching Morning Brief at 9.
This is the drive of your dreams. Introducing the all-new Škoda Kailak. Own your dream.
Škoda.
Every brand tells a story. And they are the storytellers. The Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
Is life transactional by any chance?
Of course. Everything in the creation affects everything else.
You are not only an actor, you are an activist.
Through my cinema, I've tried to always project what I really feel.
You tried to make women look beautiful for themselves.
The message to women was, let the spotlight of your life be on you.
You are fiercely competitive in nature. but you come across as a typical good boy that every mother would like to have.
But it doesn't mean you're not raging inside. Or equally euphoric.
You have donned many hats, but who is Kiranra?
I am a speck and I am not even a blink in time.
From being somebody to becoming nobody is the first step in enlightenment. Even now, I don't think of myself as a brand.
You still move ahead with your beliefs.
Winning the game is what's going to make this decision right.
It's a kind of a barometer that you have internally.
It was lovely talking to Barun. It was great fun, and I think you'll find it fun to watch.
I found the discussion very thought-provoking.
As befits such a conversation, one goes back with more questions than answers.
He gave me a formula which I'm going to remember for the rest of my life, which is something that you'll have to watch the show for.
Watch Radical Presents Duologue with Barun Das, Season 3 at these times on News9. News9 English News as it should be.
Welcome back. You're watching Morning Brief at 9. Let's bring you a mood on the Wall Street as markets have just opened a few minutes ago, and very much seems like the same mood that we saw yesterday. No real positive trigger driving up the stock markets, but thankfully no negative news also pulling down the stock. So it's been a flat trading day yesterday, and the start to this Thursday morning also seems absolutely flat. No change really in the index levels. Look at the Nifty 50, not able to sustain the 25,200 levels, which it did touch intraday yesterday before it closed a little lower. Meanwhile, Sensex hanging on with dear life to the 82,500 mark. No real breakthrough for both the Sensex and the Nifty. I think markets are definitely awaiting some spate of good news before we can hope to see the kind of highs that we had seen in September last year. Many analysts believe that September this year could be that moment where the markets finally find a breakthrough. Meanwhile, there's a little bit of pain being felt in the mid-cap and small-cap space this morning. Not much. The small-cap is down just about 0.1% or so. So is the case with the Nifty mid-cap 100 down just 0.2 percentage point. Volatility seems to be a little higher than yesterday at around this time, but very comfortably below the 14 levels. Let's bring up the Nifty 50 heat map and see where is the gain and where is the pain really coming from this morning. Well, the pain seems to be coming a little bit from the IT sector, given that the US markets did not respond all that favorably to Donald Trump saying that a done deal has been achieved between China and the US. Well, of course, we are still awaiting formal statements from Washington and Beijing, but until then, perhaps taking a cue from the somber mood in the US markets, the IT pack is bleeding a little bit this morning. Infosys is down about 1.5%, really dragging those potential gains that we could have seen on Nifty 50. Look at ONGC. ONGC is pretty much more than making up for the pain that we are feeling from the IT sector. ONGC is up about 2.6%, coming perhaps on the back of oil prices reaching almost $70 a barrel. Beyond that, no real triggers driving up or driving stocks this morning. We have a special guest joining us this morning, Amit Kumar Gupta, founder of Fintrek Capital. Amit, good morning. Help us understand what is the mood of the market. It seems to be in a very, very solid state of consolidation and very news-based movements that we are seeing. Beyond that, no real mood that can be defined on the markets, positive or negative.
Yeah, hi, good morning, Kartika. Thank you for having me. Yes, I think Indian equities continue its upward rise, supported by the global policy uncertainty easing. There is a global rally in the risk assets. There is a better than expected domestic growth data which came last week. And then you had, on Friday, a higher than expected monetary policy stimulus from the RBI.
That's right.
So in that sense, markets are doing well. Even though I must add that they are sort of underperforming the MSCI World Index or MSCI Asia Index. But then broader markets, small and mid caps have outperformed large cap. We have almost seen a 30 to 35% rally from the April lows. So yeah, I think it's a catch up on the small and mid caps as compared to large caps. So I expect that, over the next 6 to 12 months, this positive stance would actually stay on course.
stay on course. But what we are seeing in the IT sector today, Amit, of course, seems to be a bit of a bloodbath. Now, I think this could be perhaps triggering from what we have seen unfold in the US. While Donald Trump calls the China deal a done deal, there's no real clarity on the contours of the deal between US and China. Now, US futures are down even after the positive inflation print that came in recently. So how are global markets really viewing what is happening between US and China, and why is the IT sector responding so negatively?
I think globally, it's mostly driven by what happened with the tariff negotiations. So we have seen some breakthrough last evening between US and China happening. Still, I think 55% tariff on certain products is too high. So there is scope of further negotiations coming along. Mostly market is reacting to Trump's policies and the global trade negotiations which are happening. So I think IT is probably reacting to that. There are also, some new versions of OpenAI launched, in the last few days. So those are considered to be more destructive. So Nifty IT is sort of reacting to that. In general, I think over the next 6 months, Nifty IT would face some issues in incorporating what AI changes are bringing to the table.
Right.
And that's why you'll keep on seeing this -1 +1 kind of moves on a day or on a daily basis.
All right. So -1 +1 moves may not be really the kind of volatility that investors look forward to, Amit. But I want to now draw your attention to the auto sector. And auto sector, again, we are looking at Mahindra & Mahindra and Tata Motors, both companies which are foraying into the electric vehicle space. In fact, Tata Motors being the market leader in EVs, Mahindra trying to catch up fast. But the fact is that we really don't know whether that delegation of 40 to 50 Indian executives will get clearance from Beijing to go ahead and negotiate the magnets deal with China. Now, there is obviously some pain likely to hit Indian EV makers in the next, in the short term, if we can put it that way. We really don't know how long that short term is really going to be. But any other triggers which are adding pressure on Tata Motors and Mahindra this morning? Both the stocks are down about 0.5% in trade.
No, not really. I think mostly, the tariff negotiations will be critical, more so for Tata Motors because, it's a large export component. JLR is big in China, so that could be one of the triggers. My sense is that over the next 1 month, when we'll have more clarity on what are the exact tariffs, and with the rare metal earth kind of a situation, how the export of that from China is happening. These stocks should do well. Remember, we now have abundant liquidity, rates cuts have down, so EMIs will be much more better. So people discretionary consumption will pick up in the next 12 months or so. So I'm not really very negative on the auto fact. I think over the next 1 month, probably a little bit more volatility will be there because of the Trump tariff negotiations.
All right. And now I want to shift focus to the geopolitical tensions which are likely to rise in the Middle East as Iran is threatening to attack US bases in the region if nuclear talks between US and Iran fall through the cracks. And the conflict is what Iran calls imposed upon them. Now, this news has sent oil prices soaring past $70 a barrel and will keep oil-sensitive stocks like ONGC, HPCL, Reliance, etc. Under some sort of a spot today. And we are seeing that, in fact, already on the energy minerals on the Nifty 50 heat map this morning. ONGC is up more than 3% already, perhaps coming on the news of oil prices globally breaching that $70 a barrel. Meanwhile, Reliance is also up about 0.3%. What's your view on the energy pack, Amit? Are we likely to see this rally continue if oil prices continue to go up globally?
Yeah, I think Iran and defense, Iran and US sort of, have this conflict going on for quite some time. And, Trump has been very vocal about it. That he is losing confidence that a deal would be agreed between US and Iran. So they already had sort of five round of talks since April. When the tariffs were first came along board the board. The key agreement is to place constraints on Iran's uranium enrichment. If that doesn't happen, there could be attacks, and I think US crude oil in general is reacting to that.
Right.
Very difficult to predict what will happen in the short term, but technically, I think we had a small breakout. Out of 65 zone, there was a resistance at 65. We have now moved ahead, so it can rally a little bit more till 74, 75, I think. Overall, given the supply and the demand dynamics at this point of time, I would say it will be difficult until unless there is a war kind of situation. It will be difficult to go past 75. So probably 65 to 75 will be the new range.
Okay, 65 to 75 will be the new range, but well below the near $100 that we had seen once upon a time. So overall impact on India's GDP, leave alone the stock story and those who are betting on oil at the moment. But as far as India's GDP is concerned, anything below 75 is likely to augur well for India's growth, wouldn't it?
Yes, I think, RBI projections which came out last Friday, that also is undertaking around $78 to $80 for this current financial year as a base price. So even RBI does not expect crude oil to sustain above $80. So my sense is till crude prices are low, that's an additional benefit to the fiscal situation of India.
All right. I want to now bring into our conversation an interesting result update that we got from Dzire India last evening. And Dzira's FY25 sales have come in flat at 2782 crore rupees. But profit, meanwhile, is up 23% at almost 300 crore rupees. We are seeing Tata's Trent stock up about 0.7% or so in trade. I don't know whether we can look at one company as an example of India's overall urban consumption story, but do you think there's an indication here that perhaps urban consumption is ticking back slowly, Amit?
It's difficult to project that to other companies also, because every company differs, but Zara sort of competes with Uniqlo or even H&M sector. So that comparison would be much better to do. But in general, the discretionary consumption is expected to pick up in the next 6 to 12 months. As we said, there is a trickle down effect of the tax cuts. Now RBI has also cut, so the lending rates have also come down. In certain cases, PSU banks have already passed on these rate cuts immediately. So that's a good sign that some discretionary consumption will pick up, and liquidity will also ease up from September, because RBI has cut CRR for 100 basis points.
Right.
So my sense is that discretionary consumption should do well. Which pockets it will do well, whether it is apparel retailers, footwears, whether it is alcohol, that's an investment call one needs to make.
All right. And finally, I want to draw your attention to Jio Financial Services. Now, Jio BlackRock Investment Advisors has received approval from the stock market regulators, SEBI, to operate as an investment advisor. That news came in yesterday. But surprisingly, Jio Financial Services is down about 0.5% in trade today. Why are markets reacting negatively to that news?
I'm not sure why today, but in general, I think that's a very, very positive news for Jio Financial. The license has been awaited for quite some time. They've already started recruiting. I was going through my LinkedIn feed and I saw a lot of people, joining, a lot of good management people, fund managers, analysts are joining Jio BlackRock. So my sense is that, we are very close to it. In fact, yesterday only Jio BlackRock has filed 2 schemes in liquid fund and money market funds with the SEBI. Usually it takes 30 to 45 days for the schemes to get clear. So my sense is that probably closer to 15th August or so, we'll see the AMC operations getting activated. So I'm not really too much concerned about this 1%, 2% here. I think overall, things are getting back on track and fast. As a disclosure, we have recommended Jio Financial to our clients, and we may have positions on the stock.
All right, Amit Kumar Gupta, thank you for that disclaimer and for bringing all the stock action in perspective for our viewers this morning. We will leave it at that, but thank you so much for your time this morning. And before we slip into a short break, let's bring you the global headlines that we're tracking for you this morning. US President Donald Trump says China will supply rare earths to the US, hails ties with Beijing as excellent. Donald Trump orders American troop movement from some parts of West Asia, warns the region could be dangerous. U.S. Treasury Secretary Scott Bessent defends President Trump's big, beautiful tax bill, says it will stop billions in U.S. revenue from going abroad. Protests over Donald Trump's immigration policy intensify across the U.S. The president blames local leaders for slow response. And Donald Trump frustrated with Elon Musk but does not want a lasting feud, clarifies Vice President J.D. Vance. Wall Street slips on mounting fears from West Asia despite mild inflation data offering some relief. U.S. Finance Minister Rachel Reeves promises big investments in health, defense and infrastructure in new economic vision plan. Tech giants Meta and TikTok challenge European Union tech fees in court, calling them excessive and unfair. And finally, NVIDIA partners with France's artificial intelligence startup Mistral to launch major AI cloud platform in Europe. All these stories on the other side of the break. You're watching Morning Brief at 9.
Fertility rates in South India have dropped more sharply.
In the future, you can see it going further down.
Population aging is definitely a cause of concern.
This is an alarming situation. Horror of horrors, the Pollachi horror. Anna University case is despicable.
Of course, there is a political angle everywhere involved.
Can they ever erase the trauma of these Tamil women?
They give a lot of psychological counseling and support to the victims.
Can we still make up?
Light, camera, and action. Kick back, relax, grab your favorite snack because News9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching News9. Let's bring you all the global stories that we're tracking for you this morning. Let's start in Washington. U.S. Treasury Secretary Scott Bessent defended a key component of the Republican tax and spending proposal on Wednesday, saying it's designed to protect American revenue. The plan includes a controversial measure, Section 899, that targets foreign investors. It would impose a progressive tax of up to 20% on income earned in the U.S., a move aimed at countering foreign tax policies the U.S. sees as unfair. It could raise up to $116 billion in taxes over 10 years, but has raised concerns over the attractiveness of U.S. investments now.
Mr. Chairman, for whatever reason, the previous administration chose to outsource American sovereignty on tax matters, and the Trump administration believes that is unacceptable. Unacceptable. Many other countries would seek to pull in revenues from U.S. multinational corporations into their treasuries. And rest assured that the provisions in the One Big Beautiful Bill to combat this are a staking out of our fiscal sovereignty. The U.S. tax system will stand next to what is called Pillar 2, and other countries are welcome to relinquish their fiscal and tax sovereignty to other nations. The United States will not. So this bill will allow us to prevent our corporate revenues from being drained into foreign treasuries, and that is in the hundreds of billions of dollars.
Staying with the U.S., but shifting focus to the other part of the world, tensions are on the rise in West Asia, with President Donald Trump announcing a shift in U.S. military posture as nuclear talks with Iran hit a dead end. Now, on Wednesday, the president said some American troops will be relocated from areas he described as dangerous, citing growing fears of a wider conflict. Meanwhile, Iran has warned it could target U.S. military bases in the region if hostilities erupt.
Well, they are being moved out because it could be a dangerous place, and we'll see what happens. But they are we've given notice to move out, and we'll see what happens. They can't have a nuclear weapon. Very simple.
And protests over U.S. President Donald Trump's immigration crackdown intensified nationwide Wednesday, even as federal authorities moved in to reinforce efforts in Los Angeles. Now, despite a military-backed response and threats from the president to use heavy force, demonstrations spread across multiple U.S. cities. At the Kennedy Center, Trump dismissed reports of widespread unrest and instead blamed local leaders for what he called slow police action. Meanwhile, Defense Secretary Pete Hegseth echoed the president's stance in a Senate hearing on Wednesday, saying the troop presence in Los Angeles was intended to uphold law and order as federal agents carry out immigration enforcement.
There's a situation in Los Angeles that was caused by gross incompetence. They didn't have the police to handle it. The police were asking us to come in. They were very late. We had to go in to save a lot of ICE officers, as you know, who were held up. They were holed up in a building, and they were being attacked. And the military went in, the National Guard went in and got them. The police weren't able, unfortunately, to move fast enough, but we moved fast enough.
Senator, every authorization we've provided the National Guard and the Marines in Los Angeles is under the authority of the President of the United States, is lawful and constitutional. They are assisting in defending law enforcement officers and law enforcement facilities in the execution of their job
The answer is yes.
in the city of Los Angeles. And the mission in Los Angeles, as you know well, sir, is not about lethality. It's about maintaining law and order on behalf of law enforcement agents who deserve to do their job without being attacked by mobs of people. And so we're very proud that the National Guard and the Marines are on the streets defending the ICE agents, and they will continue to do that.
Well, there may be tension between U.S. President Donald Trump and the world's richest person, Elon Musk, but the Trump team isn't looking to escalate it. That's according to Vice President J.D. Vance, who addressed the rift on Wednesday. Now, Vance said President Trump was frustrated with the tech billionaire, but emphasized there's no desire for a long-term feud. Vance told reporters that he had spoken to both Musk and Trump about trying to make sure the Tesla owner is supportive of the president. This comes as Elon Musk, who once served as a Trump advisor, appeared to extend an olive branch, saying he regrets some of his recent remarks criticizing the president. That follows a very public spat between the two last week. Inflation outlook in the US presented a mixed bag in May, with consumer prices rising but not as sharply as many had anticipated. And according to new data, gas prices offered some relief to consumers, helping to ease the monthly inflation rate. But economists warn that this trend may not last. Many expect inflation to pick up again in the coming months, driven by import tariffs imposed by the Trump administration. Let's take a closer look at the numbers.
U.S. consumer prices increased less than expected in May, as cheaper gasoline partially offset higher housing costs. That's according to a report from the Labor Department on Wednesday, which also showed that underlying price pressures were muted last month. But inflation is expected to accelerate in the coming months due to President Donald Trump's sweeping tariffs. Economists say inflation has been slow to respond to U.S. tariffs, as most retailers are selling merchandise accumulated before the import duties took effect. Over the past year through May, the Consumer Price Index advanced 2.4%, after gaining 2.3% in April. Economists expected a gain of 2.5%. An increase in the cost of shelter, mostly rents, was the main driver of the rise in the Consumer Price Index. Food prices rebounded as well, though egg prices dropped nearly 3%. The Federal Reserve is expected to keep interest rates unchanged next week, with financial markets growing more optimistic of a resumption in monetary policy easing in September, though most economists expect inflation to heat up through the second half of the year and believe companies will raise prices incrementally to avoid a price shock for consumers and to keep from attracting the attention of the White House.
And despite better than expected inflation print, Wall Street closed in the red Wednesday, weighed down by growing concerns over tensions in West Asia. Here's a detailed report.
U.S. stocks ended lower on Wednesday, with the Dow unchanged, the S&P 500 slipping 0.25%, and the Nasdaq losing 0.5%. Wall Street erased modest gains as tensions flared in the Middle East. Sources said the U.S. was preparing a partial evacuation of its embassy in Iraq, after a senior Iranian official said Tehran will strike U.S. bases in the region if nuclear negotiations fail and if conflict arises with the United States. Investors also awaited more details on trade talks between the U.S. and China, after President Donald Trump said a deal was, quote, done with Beijing to supply magnets and rare earth minerals. But amid the trade developments and geopolitical tensions, BMO chief market strategist Carol Schleif says the stock market continues to show resilience.
It's clearly a market that wants to look through the short-term, whether it's exhausted or not, but it wants to look through short-term noise and stick with the long-term fundamentals. And the fact is the fundamentals keep coming through solidly. You know, people thought we'd see more inflation out of today's CPI report, and it's not being passed on. I think companies are either stocked up, they're figuring out how to absorb some of it, or they understand that consumers have had it with inflation, and so there's a big risk to passing it on.
The latest data on consumer prices showed they increased only marginally in May, while economists expect inflation to accelerate in the coming months due to the Trump administration's import tariffs. Stocks on the move Wednesday included GameStop, which fell more than 5% after the video game retailer reported a decline in first quarter revenue. And shares of Starbucks added more than 4% after its CEO told the Financial Times that it received a lot of interest for its China business.
And shifting focus now in the United Kingdom, Finance Minister Rachel Reeves has laid out her economic vision, promising major investments in key sectors to reignite growth and restore voter confidence. On Wednesday, Reeves said the Labour government will focus spending on health, defence and infrastructure as part of a broader push to jumpstart the UK economy. Take a look.
The UK government laid out major plans for public spending on Wednesday. British Finance Minister Rachel Reeves prioritised spending on health, defence and infrastructure projects. She wants this to drive economic growth as part of the Labour government's offer of a brighter future to disillusioned voters.
In place of chaos, I choose stability. In place of decline, I choose investments. In place of pessimism, division and defeatism, I choose national renewal.
She described the priorities of her so-called spending review as those of working people so they're better off. Reeves further said the government's departmental budgets would grow by 2.3% a year in real terms. She offered $257 billion for day-to-day spending on public services compared with the previous Conservative government's plans. Projects announced included a near $53 billion 10-year programme to build lower-cost housing. It almost doubles the annual amount spent on it compared with existing support. Other previously announced proposals included $116 billion for research and development and close to $19 billion for a new nuclear power station. Labour will hope the review pays off. It's seen its popularity slide since its sweeping election victory last July. Reeves's ratings have also slumped after the government introduced cuts to winter fuel payments for the elderly and to disability benefits. The government has since made a partial U-turn on the winter fuel payments.
Technology giants Meta and TikTok are pushing back against European Union oversight, challenging what they call unfair tech fees imposed by regulators. On Wednesday, both companies appeared before Europe's General Court, arguing that the supervisory charges placed on them are excessive and disproportionate. The dispute marks the latest clash between big tech and European authorities over regulation and accountability. Here's more.
Meta and TikTok challenged EU fees in Europe's second largest court on Wednesday, branding them as disproportionate and based on a flawed methodology. Under 2022's Digital Services Act, the two companies and 16 others are subject to an annual levy of 0.05% of their annual worldwide net income. That's to cover the European Commission's cost of monitoring their compliance with the law. The fee's size is based on the number of the company's average monthly active users and whether the company posts a profit or loss in the preceding financial year. Meta told judges it wasn't trying to avoid paying its fair share of the fee, but questioned how it had been calculated. It said the total had been based on the revenue of the group rather than of a subsidiary and led to, quote, implausible and absurd results. Equally as critical, ByteDance-owned TikTok said the fee used, quote, inaccurate figures and discriminatory methods. The Commission argued that both groups had sufficient information to follow the fee figures reached, defending its calculations. The court is expected to issue its ruling next year.
And staying with US tech giants, Nvidia is expanding its AI footprint in Europe with a major partnership and new infrastructure plans announced during a high-profile event in Paris. On Wednesday, the US tech giant revealed it's teaming up with the French artificial intelligence startup Mistral to build a powerful new cloud platform running on 18,000 of Nvidia's latest chips. The announcement came during a conference attended by French President Emmanuel Macron. Listen in.
I was at the president's office and I was describing this idea. And I told Mr. President that Arthur Mistral needs the support of the largest companies in France. And Mr. President says, who are they? Let me call them.
And we called them.
And he called them. And in just a few days, the great companies of France came out to support Arthur and Mistral, and I think it's fantastic. Now the circulation system, business in France, could be delivered through businesses in France.
And moving on to Australia now. Australia's Qantas Airways is pulling the plug on one of its international ventures, shutting down its Singapore-based low-cost carrier Jetstar Asia, citing mounting supplier costs, soaring airport fees and intense competition in the region as key reasons behind that decision. Take a look.
Australia's Qantas is shutting down its Singapore-based budget airline, Jetstar Asia. That will mean up to 500 job losses and see the carrier's fleet of Airbus jets redeployed to Australia and New Zealand. Qantas said Wednesday that rising costs and mounting competition had driven the move. Since the end of the pandemic, budget rivals like AirAsia and Scoot have ramped up services. That has driven competition up and airfares down. Jetstar Group Chief Executive Stephanie Tully says Singapore's Changi Airport has also become a very expensive place to run an airline. It's been steadily raising charges to pay for investment. Tully says costs there have soared for fuel, airport fees, ground handling and security. She said Jetstar Asia had only been profitable in 6 of its 20 years and was on track for another deficit this year. Now the airline will be shuttered at the end of July, with customers offered refunds or rebooking on other carriers where possible. The shutdown does not affect Qantas's other budget units, Jetstar Airways and Jetstar Japan. Shares in Qantas were down around 1.5% in afternoon trade following Wednesday's news.
And as the show draws to a close, we leave you with the visuals of a strawberry full moon that rose behind the ancient temple of Poseidon on the coast of Greece on Friday. The full moon is typically known as the strawberry moon in the month of June, when the berries are ripe for harvest. Take a look at these stunning visuals.
How do you build, this business which is as old as the hills? I mean, a pharmacy. It's been existent everywhere for the longest time ever. Just that with digitization, it gets moved online, and so many things can be done because of that. But the fact of the matter is, at the end of the day, you are building a pharmacy business, a pharmacy brand, isn't it?
We like to believe that we are not building a pharmacy online, and we think it's a little more complicated. Pharmacy is, of course, the largest part of our business, the most apparent. Most consumers need to take pharmacy more than any other healthcare need per se. But 1MG started with actually a very different idea, which was, people don't need medicines or tests, right? People need to get better fundamentally, right? When we are sick, we want to get better. And medicines, doctors, tests, whatever else you may think of are basically just tools along the way. And our at least foolish